Welcome to Forecast. I'm Darren McDermott. Today I'm joined by Cristian Maggio, an emerging market strategist at TD in London, to have a look at the dollar ruble. Now Cristian, the ruble continues to tumble as a result of the crisis in the Ukraine. Before the onset of the conflict, you believed the dollar against its Russian counterpart would reach 35.80. Now can you describe what sort of trading trends we are actually seeing with this pair and how this will affect your targets?
If you look at the moves in dollar ruble, there's definitely an uptrend that remains intact. The whole technical picture still suggests that the pair is going to climb higher. Now, the level is pretty much influenced by the recent developments, and we shall not forget that just in the wake of the beginning of the Russian occupation in Crimea, the central bank in Russia hiked interest rates with an emergency meeting by 150 basis points, which has helped somehow the currency to recover from extreme weakness that was reached at that point. Now, if you remove that intervention, you will probably already see the ruble trading at all-time lows against the dollar. So I think that the trend remains that one. There are still very many uncertainties externally concerning the development of this crisis in Ukraine, external market conditions, and last but not least, what the central bank in Russia is going to do to smooth any upward move of the currency.
In the mid and long term, whereabouts do you see this pair heading?
Well, I see it definitely weaker. What is going on in Russia, whatever the resolution, will not leave Russia unscathed in the long term. There is a pretty significant dispute about the future of Crimea, and that could extend soon to the whole east of Ukraine, where most of the population is of Russian origins or speak Russian. So there could be an interest by Moscow to grab those pieces of land and annex them to the country. Whatever the decision, as I said, there will be probably a response from Western countries, from the US and Western European countries in particular, and that could be response in terms of sanctions on Russia, sanctions on trade or capital flows, visa bans, asset freezes. So there could be consequences that would bite on the Russian economy and Russian interests. So that's probably not going to happen in the short term, but in the long term we may see weaker growth in the country, lesser access to imports and technology from the West, which would again have a negative impact macroeconomically speaking for the country. So I do see a risk of a definitely weaker currency and perhaps structurally higher inflation, which would demand also higher interest rates in Russia, all the rest being equal, that would have a negative impact again on growth.
Cristian, as always, it was a pleasure speaking to you today. Well, viewers, do join me again tomorrow when I will be looking at some Japanese economic news. See you then.